Palantir. Oh, it's a Palantir vertical line in the future. Welcome back to Strongman Personal Finance. We got to cover Palantir. Why? Because it's popular with the grifters, and I hate the grifters. And they just released earnings. Let's go check out Palantir stock, and I'm going to give you my honest opinion about whether this company is going to take your portfolio to the promised land. Because there is no better investment than buying a company that a bunch of retail grifters and dopes are constantly pumping and implying that it's going to go to $500 per share. It's currently at like what, 23? So Palantir's earnings. Well, let's look at the stock action first. So the stock price is down 8% after hours. That could change by tomorrow. Alex Karp, Mr. Clown Hair, could say something. AI, and the stock will vertical line, or all the clowns will come in and buy the dip. But as of right now, the stock is down 8%. And I guess that means earnings are bad, right? I don't know. Or maybe the guidance was bad. I don't know. So let's go ahead and dive into this. Palantir reports, make sure I'm sharing my screen. I am. Palantir reports revenue growth of 21% year over year. Okay, that's pretty healthy revenue growth. That's pretty good. It's not the 30% the grifter said it was going to be, but it's, kind of recovered a little bit. But it's still, if you think about it, there's all this hype about AI. There's all this hype about AI. And you would imagine that Palantir's revenues would just be exploding because it's AI, bro, right? And while 21% is impressive, it's not like mind-blowing explosive growth that would potentially justify this stock being as richly valued as it is. I'm not personally understanding. Maybe I'm missing something here. But their growth to me, relative to their valuation, relative to other companies, is not impressive. But, I don't have the brilliance of a meat spin kook, Idra, all these other clowns. So GAAP net income of $100 million, representing a 17% margin. So Palantir's market capitalization is $53 billion. That's probably going to drop after tomorrow, assuming the stock stays down. Because the more you say AI, the more the clowns, bro, yeah, bro. But it's a $53 billion market cap, and they made $106 million of GAAP net income. So you multiply that by 4. Okay. I mean, it's going to grow a little bit, the next couple of quarters. So you get $400 million of profit off of $53 billion market cap. That's pretty richly valued. Think about how much, if you bought the whole company, you'd pay $53 billion for, roughly, these Norton ads, such a joke, for roughly you pay $53 billion for $400 million, $500 million of profits. That doesn't seem like a good return to me, but AI, my hot guy. So they have GAAP net income, 6th consecutive quarter. Wonderful. S&P, bro. GAAP income from operations. This is what I think you should focus on because they have a lot of short-term assets like treasuries and stuff on their balance sheet, and they're generating a lot of interest income, and that's not going to last forever. I also wonder, why does Palantir have all this money just sitting on their balance sheet? What are they doing with it? Just sitting there collecting interest? Wow. It's really good use of capital, bro. I thought we were investing for the future. Anyway, so they got a 13% operating margin, which is an improvement. All right. I'm going to be fair here. So their operating margin, this is their profit before basically interest and taxes. So you can see, if you look at the history of their operating margin, they were losing money consistently over and over for years and years and years. And finally, we had this AI clown market that bailed out all the grifters. And they've been steadily increasing their operating profit margin. It went from just under 1% to 2% to 7 to 10, almost 11. And now it's at 13. So they're improving their operating margin. That's great. Okay. It's probably because of reduction in stock-based compensation expense, dilution, but whatever. GAAP earnings per share of 4 cents. So if you buy if you buy a share of Palantir, if you owned a share of Palantir, over the last quarter, you would have earned 4 cents. Imagine paying $25 for something. Imagine, take $25 out of your pocket, out of your wallet, if you have cash, and you give that to somebody, and in 3 months, they say, oh, here's 4 cents. I gave you $25, and you give me 4 cents? US tax, bro. Anyway, revenue grew 21%. Okay, we got that. U.S. commercial revenue grew 40% year over year. That's pretty impressive growth. Customer count grew 69%. Customer count grew 69%. And U.S. commercial remaining deal value grew 74%. That's a new metric. Okay, so we see some pretty impressive growth in U.S. commercial revenue. It's like private companies, basically. I don't know what those companies are getting out of it, but I guess they're getting something. Overall commercial revenue, that's U.S. and international. So they're definitely skewing more towards U.S., bro. Grew 27%, and then government grew 16%. So most of their growth is coming from the private sector, which I think is actually a good thing because the government is clownish. I don't like the government. I don't know if you guys knew that. Okay. So ignore this adjusted income crap. It's just garbage. Like, it's all finance major accounting washout BS. Rule of 40 score 57. What is this? They just make up stuff. Okay. Cash from operations of 130 million, representing a 20% margin. So what is our cash from operations compared to this quarter last year? Let's go to the cash flow statement. So this quarter last year, they generated 187 million of cash from operations, and it actually dropped. Wow. Yeah. Adjusted. What is adjusted free cash flow? Okay, we'll just go with it. Adjusted free cash flow of 149, representing a 23% margin. What was their free cash flow last year? Free cash flow, bro. 182. So declines in both cash from operations and adjusted free cash flow. It could just be a timing difference or something, but their cash from operations and their free cash flow have dropped year over year. And they have cash equivalents, and short-term U.S. treasuries of 3.9 billion. To be honest, they just got $4 billion just sitting there. What are you doing? I mean, they've always had good cash flow. They should have done buybacks or something, or paid a dividend, anything. Just give me my freaking money back. They just got what do they plan to do with this? Can someone tell me this? So overall, I mean, they're definitely they're now profitable. They've been consistently profitable, but their revenue growth still isn't impressive to me for how valued they are. And then their bottom line earnings are garbage for the price that you're paying for the stock. Think back to the example. You pay $25. You give somebody $25, and then in 3 months, they give you 4 cents. But it's going to grow, bro. It's going to be 6 cents. And oh, yeah, we'll see. We'll see. Okay. Okay. For Q2 2024, we expect revenue of between 649 and 653. So on the high end, let's see how much they project their revenue to grow. So we got, and it's Q2 2024. So 653. They're saying it's going to be 6. Where's my calculator? It's going to be 653 divided by 533. Okay, so they're projecting it's going to grow 22.5%. Okay, that's pretty decent for a year-over-year metric. I mean, it's a slight improvement. So we're getting a little bit better. We raised our revenue guidance for the full year to between 2.677 to 2.689. And that's on the high end, by the way, for the quarterly year-over-year revenue growth. So they raised their guidance for revenue. So what is their full year revenue going to be? Let's see. So they're saying, what the hell is wrong with me? 2689 divided by 2225. So year over year, full year revenue, they're projecting it to be growing at 20%. Wow. Oh my God. Man, you should definitely pay $25 or whatever for 4 cents of earnings. So they're projecting decent revenue growth. But this is, I thought this was AI, my hot guy. It doesn't make sense. I mean, we can go look at the financial statements, but I mean, we know they're increasing their profits. Let's see the stock-based compensation. Yeah, let's look at their balance sheet. Okay, look at this. They got $500 million in cash. They got $3.3 billion in marketable securities. They're just putting all their cash. What are they doing with it? Receivables are up. That makes sense because they're selling more. Prepaid expenses now, whatever. So overall, their current assets they have $4.4 billion of current assets, mostly in cash and marketable securities, which is like bonds and stuff like that. And they have $750 million of current debt. So obviously, like their balance sheet, I've never talked bad about their balance sheet. I just always wonder, like, what are you doing with this money? It's stupid. Why do we have to dilute so much? Let's see. Common stock. Oh, let's see how. Do they have the stock issuance? I mean, you can see like the common stock amount went up, but I'm curious if they say how much stock they actually issued. Where is it at? Where does it freaking say it? Stock. Proceeds from the exercise. Oh, you see this, right? So when you go to their statement of cash flows, you see this proceeds from the exercise of common stock options. Basically, employees are paying to exercise their stock options. So it's a cash inflow, which means they're probably issuing shares. And then, of course, they have this like little repurchase of common stock, like this cute little repurchase here of $9 million. Okay, so they spent $9 million buying back stock. Wow. Crazy, Palantir. Let's see. Yeah, their cash from operations dropped. That's hilarious. I'm not seeing their share count, though. But, oh, here it is. Duh. Okay, weighted average shares of common stock outstanding used in computing net earnings per share attributable to common stockholders diluted. So diluted is potentially dilutive securities. That's not what's currently out there, but there are plenty of convertible securities or options, and those get factored into diluted earnings per share. And diluted earnings per share assumes that all the securities or whatever that could be issued, they assume that it is issued. So basically, it's like the maximum potential dilution you could experience. That's what diluted means. Diluted earnings per share. So year over year, they grew their share count. Where the hell is my calculator? I need to clear stuff off my hard drive. Too much corn. Just kidding. 8.25% growth in shares. Okay. I mean, I guess revenue's growing faster. That's great. But yeah, they're definitely diluting you clowns. It doesn't matter, bro. I buy a share, I get 4 cents, bro. So that's the earnings. Wow. What's the value? What's the valuation of this company? PE 280. Price to sales 24. Price to books 50. Price to free cash flow only 77. I mean, this is the most like insanely valued company I've ever seen. This is like Tesla level clownery. What is the future, bro? They should have Elon Musk on the conference calls. All right, let's do some comments. What's up, strong man? Palantir to the moon. Oh, it'll go up tomorrow. Don't you worry. It'll vertical line tomorrow. Hey, I'm my hot guy. I really think the earnings wasn't bad. Good growth, hit EPA. The problem is everybody expects it stayed in a non-clown market. The stock probably would have gone up a little bit. I mean, who freaking knows? But in the long run, like, is Palantir really growing as fast as these people think it's going to? Like, I don't know. Thanks for doing my taxes this year, strongman. Much better than H&R. I normally catch you live. Boom, 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 boom. You're welcome, David Metz. Yes, I do people's taxes, and I will be shilling my services even harder next year because I want to soak you people of as much money as possible. But yes, I do taxes, and thank you for your kind donation. Enjoy your refund, good sir. Is Echo still right that Strongman was wrong about Palantir? Only time will tell, Gil. Only time will tell. It's only a matter of time before. I will never apologize to that freaking clown. He's such a grifter. I like Palantir, I swear. It's not because of the views. It's because I like the company. Yeah. If I ran a coffee shop, revenue was growing 20%. I have never been profitable. Why would anybody invest in it? But I've never been profitable because revenue, my avenue, bro. 21% year over year. Like, yeah, the grifters were all saying 30, 40, whatever. Now we're at 21, 22. Oh, let's price to sales 24. Let's see. If VT goes up 1%, will you get your mop top cut? I guess. I mean, VT has gone up a lot. The whole market went up today. Everybody feeling the, oh yeah. Even VT went up. Isn't that crazy? This is a clown market. Is that Jason Momoa? Maybe a little bit. It's kind of a clown market, but it's not as bad as it was before. You even know what Palantir does? Not really. I refuse to sell my 1 share of Palantir. It hits one. You know, I should buy a share of Palantir and just start shilling it. It cost me what, $23? Then I can make like thousands of ad revenue and become famous. All right, guys. Well, that's it. Oh, where's my book? Damn, what do I do with my book? Anyway, if you want to buy my book, Stop Being a Broke Loser, it's on Amazon. Go buy my book. Sign up for my Patreon, bro. Oh, join the free Discord. Hold on. Why is it not opening? Something's wrong with my computer. Anyway, I have a free Discord. It'll be in the pinned comment. Completely free. You can join the Discord, hang out with me. I'm in there occasionally. And you can talk about grifters and stocks and whatever. But I can't buy VT. It's like 78.9. That's true. It's dangerous. It's international, bro. All right, guys. Talk to you later. Cheers.